we are in conversation with Suranjana Borthakur. She is the head of distribution and strategic alliances at Mirae Asset Investment. Suranjana, good afternoon and thanks for taking the time out. I guess the biggest thing that stands out here, and also perhaps also on expected lines, is that the flows, the net flows in mid caps and small caps have come off. Notwithstanding, the month of February is just 28 days, in. What are you making of that?
Hi, good afternoon. I think overall, if you see in terms of the inflows, I think, like you rightly mentioned, mid and small, as well as I think the sectoral segment is somewhere where the inflows have tapered down a little. But if you see the overall numbers from 39,000 to 29,000, which is, I think, a 9-month low, which is there in equity inflows. I think mid and small, while it is also to do with a little bit of getting spooked in the market, but I think the large and flexi, which are the two categories where the incremental flows are continuing to come, I think there the inflows remain intact. I think sectoral, which was getting a very disproportionate sort of allocation a couple of months back. If you see 2 months back, it was getting an inflow of about 15,000 crores, which is last month was around 9,000 crores, has now come down to around 5,700. And this is in spite of about 7 NFOs that happened in this category, which garnered around 2,000 crores. If you see the overall NFOs which have happened, that is actually this team has continued in terms of number of launches, because 29 new products were launched last month. And I think that garnered somewhere around 4,000 crores. So the inflows through the NFOs have tapered down a little bit. I would also think that the ELSS category usually, which sees a little bit of uptick during this Jan to March period, has actually seen not too much of an uptick because of probably the changes which have happened in the union budget, which actually makes the new tax regime more attractive. I think also if you see the debt inflows which have outflows which have happened, it's actually to do with the financial year end. I think there's a little bit of outflow that happens, and in the below 1 year category, if you see, there's been more outflows. Gold is again a segment. Gold ETFs is a segment which has been getting good inflows last month as well as this month. Obviously, to do with the fact that the volatility usually pushes investors towards more safe haven assets. But I think SIP flows is again something which has marginally come down, but this is to do with the shorter month as well of February. I think hybrids again as a segment, if you see, most of the categories have the inflows have come down except for the multi-asset category, which I believe multi-asset is becoming increasingly a very interesting category for a lot of new investors also to come into the mutual fund segment.
Right. Suranjana, Harsh also joining in. I wanted to contextualize this for us. Is it a concern at all that the fact that you've seen net inflows shrink and shrink quite sharply, and we're at 9-month odd lows, as you correctly said?
I think, Ash, if you see, I don't see this as a significant concern, because if you see, the inflows have actually come down a little bit in the, small cap, mid cap, as well as thematic. Thematic was getting very disproportionate flows, and sometimes through the NFO routes. So it's not a bad thing to happen. A little bit of tapering down there. I think the categories which are, from a valuation point of view, making a lot of sense, the large cap and the flexi cap categories, they are continuing to get inflows, which I believe is a good thing.
Okay. And what, in your view, in your perspective, do you believe that this 15% correction on the Nifty and the near 20% correction in the mid cap and small caps from the highs, and we've seen a bit of a bounce back, no doubt, but from the highs, do you think it will spook investors largely because you're head of distribution and therefore you may have that visibility? Do you expect it to spook the Indian retail investor? And at what point would you be worried in terms of numbers and metrics? Would you be worried if and kind of how would you assess that?
I think, retail investors in India, or investors in general in India, have actually matured a little more. So, which is why you see that in spite of quite a correction which has happened in the last month, I think you don't see a very significant drop, especially in the larger categories. But yes, if the SIP flows were to drop very dramatically, that would be concerning, because that is something which is the data which is probably getting tracked globally. And that is something, you want to see long-term commitments from investors, especially, during these times of correction. It is the best time to actually accumulate more. So therefore, staying committed in SIPs during this period is very, very important. And if the customers recognize that, if the investor recognizes that, that actually is a very positive trend from my point of view. And it looks like the correction or the number coming down in SIP is not that dramatic, which I believe is because, it's just to do with the month being shorter.
Okay. We also have with us Nikhil Rungta. He's the co-CIO of Equity at LIC Mutual Fund. Nikhil, good afternoon to you as well. Your quick view on what you're making of the data at the AMFI data for the month of February.
See, first of all, thank you for having me here, and good afternoon to you and your viewers. See, what we believe is the numbers actually are much better. It reinforces our thesis that the retail, the SIP flows will continue. I mean, what we have seen is the numbers, the gross inflow is lower, primarily due to lower lump sum, due to weak market conditions during the month. And also due to lesser number of days. But on the SIP side, as everyone can see, at around 26,000 odd crores, we are largely stable. Local investors, both retail and HNIs, continues to hold their ground. It seems that it's more like a cautious optimism amongst them that the worst may be over. So we believe the numbers are actually very good, and it reinforces our thesis that the SIP, the retail numbers, are a structural story in India.
Yeah, fair. So Nikhil, Harsh also joining in. Fair. SIP, I agree that it's been resilient in terms of the number. But when you're looking at total net flows, it's also fallen sharply in that sense. Do you see this as par for course, given the fact that we're seeing markets also correct, and therefore the typical retail investor will get a bit spooked, and what will that signal be, if at all, of some sign of panic?
See, in terms of gross inflow, as you mentioned, that the numbers are lower, that's we believe is because of lower lump sum number. Lump sum, what we believe is, the investors who are knowledgeable, they generally come out with higher, invest higher lump sum during the time of correction. But when we talk about these small retail guys, they generally go with the flow. So when the market is up, say we have 7 days or 10 days of rising market, we'll automatically see these lump sum number also start coming into the picture. And this stability is given by our SIPs, which continues to remain strong. So it's just a market phenomena is what we believe.
Okay, all right. Okay, Harsh, you have one more question?
No, believe let's wrap the conversation.
Yes.
So thanks, Nikhil, as well as Suranjana, for joining us this afternoon, for giving us all of those perspectives with regard to to flows, especially with regard to what AMFI data has come out today.